Hello and welcome to the day ahead. It's Monday, October the 24th. I'm Andrew Gagan. Well, Wall Street rallied on Friday as Treasury yields paused on signs that the Fed may be considering a less aggressive stance in its monetary policy tightening. All three major US stocks surged more than 2%. The rally aided by comments from US Treasury Secretary Janet Yellen, who said inflation is not becoming embedded in the economy. For the week, the S&P 500 and Dow gained more than 4.5%, while the Nasdaq was up more than 5%. Stocks recovered from early losses as Snap plunged 28% after reporting its slowest quarterly revenue growth in 5 years as advertisers cut spending. That weighed on other companies dependent on ad revenue, including Meta and Pinterest. American Express fell after reporting that it built bigger provisions to prepare for potential defaults as an economic downturn looms, while Verizon tumbled as a revealed profit was down 23%. Meanwhile, in Europe, shares in Adidas fell more than 9% after it cut its full-year outlook. This week on Wall Street, we'll get earnings reports from the four biggest US companies by market capitalization: Apple, Microsoft, Alphabet, and Amazon. They account for around 20% of the S&P 500 weighting and are regarded as bellwethers for the US economy. Well, the US central bank should avoid putting the economy into an unforced downturn by raising interest rates too sharply. That's the view of San Francisco Fed President Mary Daly, who said it's time to start talking about slowing the pace of rate hikes. We have to make sure we are doing everything in our power not to over-tighten, and we can't pull up too fast and say we are done. Well, the Fed is widely expected to raise its benchmark interest rate by 75 basis points for a fourth consecutive meeting in November. Meanwhile, Chicago Fed President Charles Evans reiterated his view that the bank needs to get policy a bit above 4.5% by early next year and then hold it there. Front-loading was a good thing given how far below neutral rates were. US Treasury yields eased after those comments, the 10-year at 4.2, while the 2-year yield fell 13 points to just under 4.5%. Major currencies firmed against the US dollar. The Aussie seeing a dramatic reversal, rising from lows of 62.1 US cents to 63.9. Meanwhile, on the political front, Xi Jinping has secured an unprecedented third term as Chinese leader, and Rishi Sunak is firming as Britain's next PM, following Boris Johnson's decision to withdraw from the leadership contest. Well, the local share market is set to rally this morning to begin the week. ASX futures up 1.4%. Oil prices pushed higher on expectations of stronger Chinese demand, despite a global economic slowdown. A weaker US dollar also provided support for the oil price. Brent crude up 1.2% to more than $93 a barrel. Iron ore futures were flat. Base metal prices mostly lower, with tin down more than 4.5%, while copper was up. And the gold futures price was up 1.2%. And Bitcoin continues to trade in a tight range above 19,000 US dollars. Looking ahead locally, today manufacturing PMIs. Tuesday we see the RBA's annual report, and Wednesday is the key day with quarterly inflation data ahead of the RBA meeting next week. And Friday, quarterly producer prices, while overseas we'll get PMI data from the UK, Germany and France. UK Treasury Secretary Janet Yellen will speak. And on Wednesday, US consumer confidence, with European Central Bank monetary policy on Thursday, followed by the Bank of Japan, its policy revealed on Friday. And that is your day and week ahead. We'll see you again tomorrow.